All right. Hey, welcome to the Richard Ray Show, ladies and gentlemen. I'm so live, baby, because, man, the information that I'm going to spit out today, man, is going to be very informative. And I'm just so excited about it, man. It really goes back into a video that we did a couple weeks back. And the guy in the video said, you just can't die right? And so I'm going to give you some, explain the differences between some policies or some information that could help you, I guess, in his words, die better or even live better. It all just depends on how you look at it. Now, the video that we're about to play now isn't going to be the entire video because I don't really want to go in another direction right now. So we're going to play this video, and then we'll go ahead and get to it.
Why would they give you a loan for a student loan for college? They'll give you a car loan for the car. They'll give you a loan for your house. So you can get a mortgage loan, you can get a student loan, you can get a car loan, but you can't get a business loan. Wait a minute now. The education is going to cost me $100,000. The car is going to be about $70,000. The house is going to be $250,000. Why do you approve that, but you don't approve the business loan, which is probably for half the amount? Because
right. You see? So that's what we're going to talk about today, ladies and gentlemen. Business loan, well, not necessarily business loans, but a different option that you have in regards to building your own wealth, right? Because that's right. You want to protect all of your assets, right? But you don't necessarily know how to protect yourself. You don't know how to necessarily be able to at some point make your money work for you, because there's a lot of things on TikTok and social media right now that tell you, hey, become your own bank, right? And they don't really tell you what that is and really how you go about. Well, they tell you what it is, but they don't tell you what it is, and they don't necessarily tell you how to go about it, right? And so with that, when you go apply for a business loan, a lot of the time it's not going to go the way that you want it to go, and it can be disheartening sometimes, right? And now you got your cell phone. You'll insure your cell phone. You got your car. You'll insure your car. You got your home. You'll insure your home. If you're renting, you'll get renter's insurance. If you're working, even if you're not working, you're gonna wish that you had health insurance, and things like that, right? And so and dental insurance, vision insurance, and things like that. And I'll tell you right now, right? That's cool, all fine and dandy and cool, but you got to remember, how are you properly protecting yourself, right? And most of us, we don't. Again, we don't. Let's be honest. And so now he talked about why doesn't the bank want to give you the money for a business loan that's going to cost half the amount of a home loan or a car loan and things like that, right? And if you're having trouble and you don't know how to figure that out, or even if you do know how to figure it out, but you just don't really want to go through that process, there's another option, right? I'm going to tell you about a couple of different life insurance policies that actually are going to be beneficial to you, and explain to you the differences between these policies, right? So it's not financial advice. It's just information. Okay. And just something that'll help you go against the grain and really take control of some other aspects in your life. Right. The other day I really wrote, I was in a business meeting, and I wrote down a quote that I come up with a lot of quotes. Right. And I said this: financial freedom doesn't come from making more money. It comes from, there we go. I forgot it for a second. I'm sorry. Financial freedom doesn't come from making more money. It comes from changing your habits. That's really what it is. Because if you make more money and you maintain the same thought process, right, you're going to end up in a worse situation. And we all want to leave something behind for our kids, for our children, for our families. And I'm going to tell you this right now. Life insurance isn't really meant to protect you. It's meant to actually protect the individuals that you love and care about after you're gone, right? Now, there are some policies that you can definitely benefit from while you're still alive, right? So first one I'm going to talk to you about is going to be term insurance, right? Term literally means just that, term. It's an insurance policy, okay, that protects you for a certain amount of time. And then after that certain amount of time, you have to renew that policy, okay? So say, for instance, you have a 30 term, right? That just means that your the life insurance policy is going to be good for only 30 years. Okay? 30 years before you have to renew. Okay? That's simply all that means. Okay? And then you also have to go through another underwriting process and things like that. Now, I want to give you a little bit more tidbit. As you get older, insurance becomes more expensive, right? And so I'm going to tell you about a couple of different policies that's going to help you, that's going to make it make sense to you. Okay, so you have your term policy again, which is just going to be a policy that covers you for a certain amount of time, as long as you don't miss your payments, as long as you don't miss your premiums. Okay, now if you miss your premiums, then you're out of luck. Okay. One good thing about the term policy is going to be the fact is that it can transition over into a living benefit. Okay, that means that your death benefit, right, the amount that would pay out in the time in the moment of you dying is it can be transitioned into a living benefit. Okay, that just means that if you come down with some kind of a terminal illness, your death benefit will be paid in advance to you, okay, to help you pay for some things. Okay. Now, hold on. Ken, let me ask you this. Do
Uh,
you know anything about life insurance policies?
I know a little bit about it, but not as much as you.
See, and another reason why I want to talk about these things is because I want to make it not so taboo
hmm
for people to talk about it,
hmm
right? Because people will protect what's replaceable, but don't protect what isn't. And what I mean by that is that you'll protect your phone, you'll protect your business, you'll protect your home, you'll protect your car, you'll protect your cell phone, you'll protect all these materialistic things that could be replaced or given away to somebody or whatever the case may be. But you won't protect the main thing that's the most important. Is going to be your most powerful asset. Your most powerful asset is going to be what?
Yourself.
Exactly. So why don't people take themselves more serious? Right?
Mhm.
If somebody came into your home, right, kicked in your door and said and just tried to rummage through everything, right? You protect your family, right? You protect your family in that moment because you see the immediate harm, right? You see the immediate harm, so you're gonna do whatever you want. You're gonna do whatever you can do in order to be able to make sure that immediate harm is taken away from them, right?
Mhm.
I'm gonna tell you right now, if you die, you don't have any kind of coverage, you are the harm. You're causing more damage than you're actually helping because they got to go put together a GoFundMe or something, right? Or depend on their life, depend on their savings, right? Your bills become their bills. Your final expenses become their elongated expenses, right? So now, there's another policy called the whole life policy. So, what the whole life policy is, it's going to be it's a permanent policy. Okay, it is a permanent policy. Now, it is going to be more expensive than a term policy because now with the whole life policy, you get cash value. You add cash value into it. You know how you get on TikTok and things like that, and people say, "Become your own bank,"
Mhm.
right?
All right.
They tell you that, right? One thing they don't tell you is the fact that you have to qualify for these types of policies,
Hmm.
just like any other type of policy, just like any other, like even for a term policy, you have to qualify for it, right? The now, if you have to qualify to buy a car, you got to qualify to buy a home, you have to qualify to finance a cell phone, you got to qualify to be able to get a certain utility at your house, you got to qualify for all these things. What makes you think that you don't have to qualify and abide by certain rules and regulations, right?
hmm
That's the thing. This is what people don't understand. When it comes down to any kind of an insurance policy, you have to abide by certain regulations and rules just so they can make sure, hey, if we're going to pay out this money, we got to make sure that you're not doing anything intentional for it, for us to have to pay out this money sooner than later,
hmm
right? And I bet you didn't know, depending on what you do for a living, right, also determines how much you have to pay for your policy.
I mean, like the risk of life and what you do.
Correct. The risks that you face every single day. If you're a construction worker, your job is pretty dangerous. So the height of the height of possibility of a guaranteed loss is higher than someone sitting behind a desk. Right?
Imagine what a rapper's insurance is.
Bruh. Entertainment industry, they take out an insurance policy on everybody. Hell, people take out insurance policies out on body parts. Let's be honest. Right? Why do they take out insurance policy on body parts? Because their body part is their main asset. Right? Now, the reason why I keep talking about the main asset is that you are your main asset, because without you, everything that's going on in your life has no relevance to each other. That's it. You're the spider that's weaving the web. That's simple. And so with whole life policy, right? You have your death benefit. And this is where you can put cash value. And this is one of the policies that you can put cash value into. Now, with the whole life policy, okay, your interest, it's where you can earn compound interest, okay? However, your compound interest is a fixed interest rate, and your premium is a fixed premium rate. Your premium is going to be the amount that you pay every single month to maintain that policy, okay? Now, what happens is, since you're putting cash value into it, okay, half of your cash value, half of the amount that you pay goes towards your cash value, and the other half goes towards your insurance policy. Okay. Now, you can change your interest rate and your premium at another time, but you're locked in at that premium and that interest rate for a certain amount of time. Okay. Now, the cool thing is that you can borrow against it. You surely can. And of course, you don't have to pay it back. It'll just be taken out of your death benefit if you choose not to pay it back. So by the time you die, if you haven't paid that loan back, you can it'll just come out of the death benefit when it gets paid out. Okay. Now, there are more details, but I don't want to go into in-depth details like that. Okay. Now, actually, my financial mentor actually gave me some information, actually, which is really fire, to be perfectly honest. So the advantages of a whole life policy, okay? 1 is going to be a guaranteed interest rate. 2 is going to be the pay schedule. 10 pay, 20 pay to age 65 can be designed prior to issue. So essentially what that means is the fact that you can decide to pay in for a certain amount of time before that policy starts paying for itself, or before it starts paying back to you. Okay. So say for instance, you want to say, hey, after 10 years, because you can set up this policy to be able to pay you starting at a certain time. So after 10 years, if you want this policy to start paying you after 10 years at a certain amount of money on an annual basis, because what you want in an annual basis will be paid out to you on a monthly basis. Okay. What happens is, if you say, hey, after 10 years, I want to be able to, have that money be paid back to me. That's cool. That's fine. You can do that. Now, however, the shorter time that you want to pay into the policy, the more money you have to put in up front. Okay. And that's going to determine how long how much is going to be paid to you, and how long it will be paid, depending on how much you want to be paid to you. Okay. Now, it is a permanent policy designed to last your entire life. Your entire life. That's what permanent means. Right now, some of the disadvantages is that its guaranteed interest tends to be a conservative rate. Okay. So what essentially that just means that because you're stuck at that fixed interest rate, that's just all that means. You're not taking any real chance. Okay. Now, mind you, the whole life policy is going to be indicative of the S&P 500. Okay. Now I know sometimes this can be kind of boring to talk about. However, it is very interesting to talk about because the more you learn about it, the more you be like, okay, it makes
Mm-hmm.
sense. All right. Now premium is fixed. Again, that means that you can't change it. And death benefit is fixed. That means that you can't change that either. And accessing cash value eliminates the guarantees. Okay. Now, the next one we're going to talk about is going to be the universal life. Okay. So essentially with the universal life, it is going to be a flexible premium and a flexible interest rate. Okay, so it essentially means that you can put more in at any time that you want, up to a certain amount within a year. Okay, if you go past a certain amount within a year, um I forgot what it's called, it becomes something. But however, if you want more, if you want more of your death benefit, right, you have to take up your monthly premium. Now I'm gonna give you a key. Okay, with these cash value policies, your cash value will never outweigh your death benefit. What does that mean? That just simply means your death benefit will always be more than your cash value. Okay. Now, with that, also some of the advantages to universal life insurance policy is going to be a flexible premium. That means that again, you can pay more in, you can pay less in. It can go up and it can go down according to what you want. Then flexible death benefit as needs change. Okay, so you change your premium, you change the amount of your death benefit. Now, the living benefit is going to work the exact same way as the term policy. Okay. Now, it is a permanent policy designed to last your entire life, and then also you get access to cash value. Okay, that's a win. This is one of those ways that you start becoming your own bank. Now, I'm going to tell you this, right? You can put a large lump sum in at any point. You can put a large lump sum in upfront, and the more you put in upfront, the more value your interest rate will provide. So of course, if you put if you pay 300,000, and this is just a number, you don't have to put a huge amount up front. Just to let you know, you can pay into it every month. Okay, you can pay a $300 a month. Okay, but say for instance you have the money to be able to put in, let's just say $100,000. Okay, and your interest rate at that point at that time is 10%. You'll get 10%. You'll get 10% added to that 100,000. If you put $300 in, okay, half of that $300 is going to go towards your cash value, so it's going to be $150. You'll get 10% on that 100%, $150. Okay, so now the I know, man. I know this is gonna be kind of boring, man, but it's okay. I'm excited because I get live about it. Now, the disadvantage is that it's guaranteed interest tends to be a conservative rate, and underfunded policies may require additional premiums later in life.
Is Universal the most popular one? I mean, like, not the most popular, it's the hardest to get into because of the like you can like adjust things.
No, I wouldn't say it's the hardest to get into. What makes it hard to get into is, like I said before, you have to qualify for every policy. That's simple: term policy and a permanent policy. Okay, now I want to give you this advice as well. A term policy can be converted into a whole life policy. Well, a term policy can be converted into a permanent policy.
Mm-hmm.
Okay, so you can convert that term policy into a policy that earns you cash value, which in turn will earn you compound interest. Okay, what makes it hard to be qualified for is going to be the status of your health. Okay, not only the status of your health, but how much you can afford
Mm-hmm.
to put into it. Okay, now a good person, a great agent that's going to work for you is going to do a financial assessment. Okay, and the purpose of that financial assessment is going to be, okay, what can you afford without breaking the bank? Okay, so we go through what you make a month versus your expenses and your debt. Okay. Um, so after we go through that, then we like, okay, cool. Hmm. Hmm. this is okay, cool. Now we go back and do your financial, and then we go back and do your follow up. Like, okay, cool. After looking over everything, this is what we came up with. Okay, this is what you can afford without actually breaking the bank, and still be able to live, and still be able to, do what everything that you need to do. Okay, um, so that's really what makes it hard. All right. And then also you have your universal index, I mean your universal life insurance policy, okay? With the universal life insurance policy, it's going to work the same way as a whole life, but it's more riskier. It's more of a risk. Okay? And the reason why it's more of a risk is simply because just like the whole life policy, it is going to be very indicative of the stock market, the S&P 500. Now, mind you, I say indicative because it is not in the stock market. Okay? It reflects the stock market. It is not in the stock market. Okay? Um Now, with that, okay, now, but it still works exactly the same. If the market goes up 30%, you're gonna gain 30% interest. If it goes down 30%, you're going to lose 30% interest. Okay, but it still works the same way as a whole life policy. You still get cash value. Okay, uh, now you also have your index universal life insurance policy. This is going to be more so of a conservative option as well. Okay, it works exactly the same as the universal and the whole life policy. The thing is the fact that it has a cap. Okay, the cap does change on an annual basis. Okay, but if so, it's flexible. It's a flexible premium, and it's a uh, um flexible premium, flexible interest rate, and flexible death benefit. Okay, just like the index unit, or just like the universal, and just like the whole life. Okay. Now the difference is the fact that the index universal life insurance policy actually has a cap to it, and it has a floor to it. The absolute thing about this one is that you never lose money on this one. Okay, it's not as much. It's conservative because you don't take the chances as a universal policy. But I will say this: the great thing about it is, say for instance, the market goes up 30%. Your right now your interest rate will be capped out at 12%. However, say for instance the market drops by 30%, goes negative by 30%, you'll still gain money at 0.75%. Okay. Now the cool thing is the fact that you can borrow money against it. Now, why would you want to put money into it and want to take money out a month later? It doesn't make sense. Doesn't make sense at all. It's like putting a frozen dinner in the microwave for a minute and thinking it's going to be cooked all the way through. It doesn't work like that. Okay? Or it's like putting baking a cake and putting it in the oven and taking it out 30 minutes later thinking it's going to be done. It's not. You have to give it time to mature. You have to give it time to earn some true interest. Okay? So, when people talk about becoming your own bank, those are the options that they're telling you about. Now, there is more intricate details in regards to how it all works, and I'm not going to go into it at all at this point. However, I can tell you this. Now, with an index universal life insurance policy and a universal life insurance policy and a whole life insurance policy, you can borrow money on that. Okay, you can borrow money, and if you decide never to pay it back, it'll get paid back when your death benefit pays out. Okay. Now, the cool thing is with these policies, you still earn interest even while you're even when you take a loan out. Okay. Now, mind you, you can take out the entire amount and cancel out the policy completely. Now, if at that point that whatever interest is accumulated at that time, when you decide to completely pull out all that money and cancel the policy, you're going to get taxed on the amount of interest that was earned. You're not going to be taxed on the amount that you paid in, but you will be taxed on the amount that was earned in interest if you decide to take it all out at once. Okay. So, example. Say for instance, over the last 10 years, you put $100,000 into that policy. And you said, hey, you know what? I want to pull out. I want to cancel that policy. And at that point, when you say, hey, I want to, um, yeah, I want to pull out that policy. I want to cancel the policy. Say for instance, that interest rate, the interest that you earned was another $100,000. These are just numbers, people. Okay, numbers, just hypothetical numbers. But this is guaranteed. You will be taxed on that $100,000 that you earned in interest. Okay, you won't be taxed on, and you're going to be taxed at whatever the tax is at that time. Okay, so just wanted to let you know that. Okay, and then
Is there a certain one you would say is your favorite?
for me, it all just really depends on what you're okay with, right? For me, I believe that the Index Universal Life Insurance policy is my favorite because you have a guaranteed return. You don't have a loss on that. You truly don't have a loss on it. Now, these are just these are just some of the. This is just a tool that you can use in order to broaden your financial portfolio, to broaden the protection that you have on your family. And I'm gonna tell you this as well: the death benefit that pays out at the time of your death, your beneficiary receives that tax free. Okay. Now, when you go into assets and estates, things like that, that's a different situation. Okay. This is why you have to set up a what? A trust. Okay. You have to set up a trust, because if you don't set up a trust and you have assets and you have an estate, well, an estate is just really another word for assets. Okay. Now, I don't have my license to talk about that in detail. I'm just letting you know, estate is just an accumulation of all your assets. That's really all it is. Okay. I learned that when I was studying for my my license.
Doesn't it go to the government if you don't?
If you don't have a trust, correct.
Yeah.
So I just wanted to talk about that, guys, because that's something that we need to be paying more attention to. And I'm going to tell you right now, okay, the interest rate, okay, that the government set really pretty much is going to be a little bit over I think it's going to be 3.6%. Okay. However, interest rates are going up and up and up and up. I'm going to tell you this right now. You think 2022 was bad? 2023 is going to get worse. So, if you're not conscious of your finances now, you need to become conscious of your finances now. So, now, permanent policies are going to be more expensive than a term policy. Okay? It just simply is. However, if you can't afford a permanent policy right now, you can acquire a term policy that you can later convert into a permanent policy. People, don't just think about protecting your family in the normal ways. Think about protecting your family even in ways that you can't when you're no longer here. Be an asset, not a liability. Not only be an asset to yourself, but be an asset to the ones that you know and love. Because regardless of how you feel about it, if you want to leave something behind for the people that you love, start teaching them now. Start teaching them now. And make sure that that you properly leave it all behind so they can receive it in the right way. I'll tell you this right now. A lot of people don't get into it, the life insurance thing, talk about it, because They don't truly believe that it's something that can benefit them right now. I'm gonna tell you right now, life, you live life every single day. And one thing that we can all say is the fact that it is unpredictable. Life will affect you right now. Life will definitely affect you right now. So why not protect yourself and your friends and family members right now? Don't wait until later. Get it right now. As you get older, it gets more expensive. And the more expensive, the bigger the problem and the bigger the liability is later down the line. So that's pretty much it for this one, man. And if you guys have any questions, man, email me at info@richardrayllc.com. And if you want to find out more information about these different policies, email me at info@richardrayllc.com. Or you can simply hit me up on hit me up on Facebook. All right, Richard Gibbs or Richard Ray. My Facebook page for this is going to be Richard Ray Uncensored on Facebook and also on Instagram. Okay, Richard Ray Uncensored. Just type in Richard Ray Uncensored on all social media platforms, and you'll be able to find me. And if you have any questions, get at me. I'll be more than happy to sit down with you and help you out, because right now is the time to think about your financial strategy. Remember, financial freedom does not begin with more money. It begins with your habits. If you get more money and you maintain the same thought process, you're going to end up in a worse situation. So think about that. I'm here and ready when you're ready to listen and when you're ready to make a change. Come up with different financial strategies to be able to make sure that your family can eat for the rest of their life. Let's go. And that is it for the Richard Ray Show.